Markets had a pretty eventful week, as you can imagine. Start of the week, I should say. I mean, starting from Friday with the unemployment report here in the US. And then, of course, over the weekend, news both from Venezuela about the ailing health of Hugo Chavez and then the resignation of the government in Italy, as well as some China trade data. So plenty to discuss here with Michael Casey, our foreign exchange guru and market expert. Hi, Michael. How are you doing?
Good morning, Francesco.
Is this a new haircut?
This is all for you.
This is premiering, world premiere of your haircut.
I think it's a positive sign, don't you?
Is it a positive sign?
I mean, haircuts generally mean that we can move on after
a new star.
Yeah, so, I think Greek bondholders have been hit harder than my hair, but nonetheless, it's doing okay.
So tell us about the markets. I mean, what should we be looking at? How are they moving today?
We're sort of flat in terms of the US futures right now. Maybe because a lot of the action that we saw play out in stocks on Friday has already happened. We had those jobs data and, of course, the consumer sentiment numbers that Tim was just talking about. But Asia played on that quite nicely. Fiscal cliff is really going to be the focus. I mean, that just seems like a bit of a tired record at this stage for all of us. But nonetheless, I think an important point to remember in this, as much as markets are very sensitive to the shifts in this. So we've got now, of course, John Boehner and President Obama having not so secret talks over the weekend, suggesting that they are back talking again. We may have the possibility that something positive after a week of rather negative signals coming from both sides will give the market a bit of a lift. But my guess is that the market's priced in much of what's happening right now. Sure. They know that we've got 3 weeks is an eternity for this sort of process in Washington, and that until we get right towards the end, we're not likely to see
time is running out, though, because the president has said he wants to go to Hawaii on the 17th.
Right.
Congress stops working really on the 21st, so we don't have that much time.
We don't have much time, but I think that, of course, the president could, of course, postpone that trip. Right. Congress has been known to work right through the end of the year. Yes. I mean, the bottom line is they are going to take whatever they can politically out of this for as long as they possibly can. I think the point is, at some point, people see a compromise. Yes, we could go over the cliff partially. We could kick it down the road. I mean, I think to some extent, there's a feeling amongst a lot of investors right now that maybe the worst of the worst is overstated. Not to suggest this isn't important, but the 5% bang at the as January 1, of course, is a misnomer in itself. So anyway, that's where the focus is right now. You've mentioned a few other things. I mean, China, we had some trade data. That wasn't so positive, showing that China, really sort of probably more indicative of what's happening in the rest of the world than China, because its exports were weaker, its imports were flat. We had some positive industrial production numbers over the weekend from China. That's meant Asian markets didn't seem too bothered about that, but nonetheless, it is a sign that things are worse. And of course, a place near and dear to your heart has entertained us once again. With Mr. Berlusconi suggesting he wants to run again. Of course, this prompting the current Prime Minister,
although the markets didn't seem too amused. I mean, the stocks are down sharply.
Broadly, markets are okay, but yes, the bond market, the stock market in Italy trashed. I mean, it really.
And bond yields are also soaring.
Bond yields up. I think it was 41 points last I checked for the 2-year and 33 for the 10. That's a really big sell-off. Of course, Italy is that much more important than Spain, and Spain, of course, is really important to the Eurozone. So, this is a big deal.
So do we think now that we are reopening the European question? It's been quiet for a while now. Italy is the start of something big.
It's interesting because the euro hasn't really sold off this morning. It's been pretty flat. There has been some contagion. Spanish bonds have sold off. Greece has got its own problems. Whether or not this goes from being an Italian problem to a Euro problem, we're not quite certain. Things are still relatively stable in Europe right now, with this expectation that the ECB's magic bond buying is somehow going to stabilize
That's a 3.1% fall in the Italian stock exchange. That's pretty steep.
It is pretty steep, because this is a rather scary scenario. Of course, Berlusconi has floated the idea that he would end the euro in Italy. I mean, he's not likely necessarily to become the Prime Minister yet again, but nonetheless, that's a real risk for people. And it just adds the one thing that markets hate, which is uncertainty. There was a certain steady as it goes relatively.
And now it's all back in play, right?
It's back in Italian politics, and
we'll have to see, Mike. That's very interesting. Thank you so much for your contribution, as always.